Hello there, awesome traders, and I would love to thank you for watching this video. Without you watching, I would not be where I am today. So, thank you for watching this video. And before I go on, allow me to thank my mentors. You see, if you're wondering how is it that I am able to find these good plays that you can use to make money, it's because of my mentors. you know Without my mentors, I wouldn't be able to find these good plays. So allow me to thank my mentors: Robert Kiyosaki, who wrote the book Rich Dad Poor Dad; Timothy Sykes, who wrote the foreword to the book The Penny Stock Course, written by his student Jamil; and finally Matthew Kratter, who wrote the book Rocket Stocks. And you can find all these three books. If you want to learn more of this strategy, maybe you feel these videos are too basic for you, or you are getting confused, these books are references that you can go to and learn more, and hopefully start making videos like me. So thank you again for watching. Thank you to these mentors. Now, according to the proprietary system or the strategies that I learned from reading these books, Facebook seems to be in a buying position. So I found, I think, about like three stocks, and Facebook is one of the stocks that I found. So what I did was I created a watch list, and then from that watch list, I I analyzed them, and then I found like three of them. Then one of them is Facebook. There are other two of them. Yeah. So what happens is when there is a bear market, okay, you need to understand this. This is very important. When there is a bear market on the horizon, when the Fed pauses interest rates, or when the Fed interest rates are about to crash, I think about three things happen. The first thing is the index markets, the S&P 500, goes up in price. The second thing that happens is the price of gold and silver go up. And then the third thing that happens is the technology sector goes up in price. So what you'll find is professional traders in the stock market focus on the technology sector, and that's what this strategy is about. Okay, so you will notice even on my trading view profile, it's either the technology sector, the S&P 500, or a commodities market, which is Bitcoin, gold, silver. I know it sounds crazy, but that's how the market cycle is. Okay, so it's more like a market cycle, and it keeps happening and happening. And it's especially during this time, that's when you find that this cycle is like in full force. But then again, with this strategy, the rocket booster strategy, you'll be making you might be making at least the 80% per month. Like I wrote in my previous article in on TradingView, I'll put a link for TradingView community, traders community. I'll put a reference link below for TradingView community. Now, in that article, what I wrote about was Facebook, and how the the monthly performance of Facebook is 8%. And that's what you will find even when you are trading options with no margin. Some stocks in the tech sector will give you, depending on how the market condition is that year, some stocks will give you 8% performance per month, and then others they will give you I think 20 to 15%, which usually amount to like 200% per month. So if we look at this stock since I think since March. Okay, so since March the price was 118, 190, 198. It from 198 to 319. So basically the stock has moved from the time that this buy signal was online. The stock has gone up by $100, right? So that's almost like 50, roughly 50 to 40 percent. You know, if I'm not mistaken, about 70 to 80% move. So which almost comes down to about 8% per month, and that's how powerful having a strategy or a system when you are trading uh, these kinds of stocks. So we're going to look before we end this video. We're just going to look at maybe some of the reasons why the price could have, taken this hit. Because I think another thing that you will notice, right? The price gapped here above it. So this blue line here, represents the 50-day moving average. And then this red line here represents the 200-day moving average. And then when the 50-day moving average crosses the 200-day moving average, it indicates a buy signal. So you will notice that okay, the price has gapped. So after the 50-day moving average crossed the 200-day moving average here, the price gapped up. I'm dehydrating. Dehydration is very important. It helps with headaches. So if you're having a headache, please dehydrate. Drink a lot of water or tea. So what I do is I take water, hot water, and I just dip a tea bag in there so that because water is pH 7, so it's kind of like tasteless, right? Water really doesn't have a taste. So to avoid using too much sugar, which is not good for your health, too much of anything is not good. I just put a tea bag in my hot water to encourage me to keep drinking more water, because tea is kind of mellow. You can use coffee, but tea is just gives you that mellow, mellow, cool vibe. But you have to get used to tea, the taste, because tea has got this strong taste depending on with which brand of tea leaves that you are drinking. It does have a slight taste, so you will have to get used to that taste of tea. Anyway, I don't know what I'm talking about. Why am I talking about tea? So, but anyway, the thing that you will notice is it will gap. The price gaps up. Okay, this is a very good sign, especially when you're using this strategy. So the price usually gaps up here, and ideally, if it gaps up after the earnings report, like what happened here. Okay, they came out like an earnings report, and then there's a surprise earnings report, and then boom from nowhere. This kind of reminds me of what happened with Starbucks when it was actually in a downtrend, and then an earnings report came out, and boom, the stock just gapped just like that. You know. So that's what happens with these stocks. Sometimes you really have to be careful. That's what I'm saying. Once you understand this market psychology, this is the number one market psychology I am going to teach you. If there is anything, if you do not remember anything that I have said, this market psychology I am telling you is going to help you on your journey. Listen to this. Whenever there is a bear market, the technology sector stocks go up. Technology sector stocks such as Facebook, okay, and Microsoft, those technology sector stocks go up in price whenever there is a bear market. Another thing, the price of gold goes up. So let's say you're not a fan of buying gold. Just follow these dudes, these guys who like buying gold and Bitcoin. Let's say you're not a Bitcoin guy or you're not a gold guy. Just follow these dudes who like Bitcoin and gold. Then notice the professional dudes who buy gold and Bitcoin. Like Robert Kiyosaki loves, he's like a professional gold trader. He's like a professional commodity trader. Okay. So follow him and understand him. Once you understand how to buy gold, you use that knowledge. Whether you understand how to buy Bitcoin or gold, use that knowledge. Either understand how to buy Bitcoin, either understand how to buy the S&P 500, or understand how to buy gold. These three. Then use those same strategies, then apply it to technology stocks. Okay, so for us in the stock market, we buy tech stocks. For them dudes in gold and silver, them they buy gold. For them dudes in Bitcoin, them they buy Bitcoin. For them dudes who dig indexes, they buy indexes. So think of it like four tribes. In the stock market, there are four tribes. There are dudes who buy tech stocks. There are dudes who buy crypto, Bitcoin. Then there are dudes who buy gold. And then there are dudes who buy indexes. Once you understand that market psychology, you are home, set and dry, and you'll be making 10% per month on your money. And that's the whole point of all these videos. You understanding that market psychology. It's really not about technical analysis, if I was to be honest with you. That's why, if there was one indicator, I think I saw a post by TradingView on Twitter which asked, if you had one indicator to use, which one would it be? It's this one, the rocket booster strategy, right here on my screen. If I had one indicator to use, this is the one I would use, the rocket booster strategy. The 50-day moving average and the 200-day moving average. If there was one indicator that I would stick to, it's these two moving averages. Why? Because as a professional trader, you need to understand market psychology. Once you understand market psychology, then you can trade for the long term. Okay, so long term traders understand market psychology. Once you understand market psychology, you will never blow up your account. When you understand market psychology, then you can graduate now to high frequency trading. right? Where you're trading now at high margin, but you have to start from the bottom. You have to start from the bottom. This is beginner level strategies that I'm saying here. You start from the bottom. You understand market psychology in trading. Once you understand market psychology, then you understand the the way the market moves, how to buy gold and silver. So how to buy gold and silver is like level 2. If you don't want to learn how to buy gold and silver, learn how to buy tech stocks. Okay? If you let me see, maybe I'm wrong somewhere. Can you check for if you don't want to learn how to okay, awesome. Let me show you another stock, and I think I'm going to end on this. So learn how to buy gold and silver. Then learn how to buy the S&P 500. So I'll show you another tech stock. This one. This is another tech stock. So you learn how to buy gold and silver. Okay? Number one. You choose either learn how to buy gold and silver, or learn how to buy Bitcoin, or learn how to buy the S&P 500, or finally learn how to buy tech stocks. So like Nvidia is a tech stock, just like Facebook and Microsoft. So these they are all going to go up during this bear market. Why? Because people believe in technology. They want to pack their money. Think of these guys as investors. They own millions and millions of dollars. Right? This is like billionaires. These are like billionaire hedge funds. People packing their money, ensuring that you know. So these are people trying to invest big sums of money, and then they want to preserve the wealth. So they invest in things that will protect their wealth. So when they invest in the S&P 500, they're investing in the American stock exchange markets. When they invest in gold and silver, they're investing in the value of gold and silver because gold holds its value. When they invest in Bitcoin, they're investing in the technology, the blockchain technology, because the blockchain technology supports financial systems, global financial systems, and peer-to-peer financial systems. So they invest in blockchain technology when they buy Bitcoin. And then when they invest in tech stocks, they're investing in things like social media and artificial intelligence. So these people, they're investing because they believe these things will hold their value in the future, right? And sadly, I don't want to say sadly, but real estate takes a hit during a bear market, right? So like the the worst time to sell real estate is in a bear market because people won't buy real estate. You understand? People don't buy real estate in a bear market. In fact, in a bear market, the prices of real estate go down. There are so many this is the time when you will find ghost towns and ghost cities in the real estate market, right? So I'd love to thank you so much for watching. I could go on a rant, but my time is up. Please do not buy what I tell you to buy. Do not sell what I tell you to sell. Do your own research before you buy or sell anything. This is not financial advice. It's purely for education purposes. And I hope you were entertained by my rant. Please rocket boost this video to encourage me. I would love to thank you so much for watching. Keep learning, keep studying, and bye bye.